We will now move over to the first session of today, which is about the area that is regarded by many as the solution for making companies contribute to this shift towards sustainability. And as those of you who have spoken with me about this before, you know that I'm very concerned that a lot of reporting today is a compromise fix, a solution that makes those who hope to see companies become more sustainable happy. It makes companies a bit unhappy because of the administrative burden, but not too concerned because they don't really have to change anything. That's the negative aspect of it. And at the same time, I think we all agree also that accounting, reporting done properly with proper assurance or auditing of some kind is perhaps the most important tool to control and enforce a new sustainable regime for companies. So I'm therefore very happy that we have such a great panel of speakers to discuss these issues. With my colleague from Finland, Professor Jukka Mähönen, as the first speaker. And you can come up here now, please. And then, yeah, okay, good. That is all ready. And then we will move directly onwards from Jukka's presentation to the other presentations, and the speakers can take place at the panel table once you've done with your speech. Please go ahead, Jukka.
Thank you, Beate. Is this working? Yes. All right. So my presentation is now some kind of prologue for this session. So part of the Sustainable Companies project, as told you yesterday by Tineke, when she told about the groups and the cross-jurisdictional research we have made on groups. So similar cross-jurisdictional survey or research based on the over 20 mapping papers we have made in the project. So we have now made a cross-jurisdictional research on reporting and assurance issues with Charlotte Villiers. Charlotte will continue with integrated reporting after me, but now I present our research. So accounting, auditing and reporting, supporting or obstructing the sustainable company's objective and results of cross-jurisdictional analysis. So as for the whole Sustainable Companies project, also for us the starting point is internalizing externalities. So sustainability cannot be effectively achieved unless the objective is properly integrated. And this overarching objective of sustainability is integrated to all law, and in our case, all corporate law, and to all internal affairs of companies. So we have discussed this yesterday, and we continue discussing today. So in economic terms, externalities, so the negative environmental consequences of the company's production and business must be internalized. So this is starting point, and this is starting point for us also. So now our question in our paper and in our research, the question is how accounting, reporting and auditing is responding to this challenge, so to internalizing externalities, so sustainability. So we focused in this research on reporting and auditing requirements regarding the impact of corporate activities on the environment. As Tineke explained you yesterday the nature of the cross-jurisdictional research, so I don't go to details. So we followed the same pattern that Tineke explained yesterday. And similarly, the results, the paper is published by the Cambridge University Press, book as a chapter. And unfortunately, due to copyright reasons, we were not able to publish in the website the report itself, so there is only abstract. But in the book you can find it. So as Tineke explained, a magnificent work has been done by the project members in the several jurisdictions that were covered in the mapping paper. So over 20 jurisdictions from Africa, Americas, Asia, and Oceania are covered, and our research, our cross-jurisdictional research, is based on those mapping papers, and of course cross-checked by the authors of the mapping papers. So if there are any faults, they are strictly ours, but hopefully not. And the theoretical basis, as Beate emphasized already, the theoretical basis is that it is important to look what is the role of reporting and assurance, and especially the people behind them. So those people who formulate the standards for reporting and assurance and who do the job, so accountants and auditors, how their role, how they see and what are their role in our market economy, let's say capitalism. So the role of reporting, it is not only reflecting a reality, but through reporting we also construct reality. So this is the basic nature of reporting. Reporting is a powerful tool for either to construct reality for the future or creating obstacles for the future. When we looked at all the jurisdictions in question, so I am not going now in details. So many of those issues we covered: the role of international financial reporting standards, the role of different voluntary standards and standard setters. They are discussed by the following speakers. So, but the overarching result is there is a strong and well-established corporate financial accounting culture all over the world. So, modern financial accounting, it is approximately 500 years old. And through, let's say, especially through to international financial reporting standards and also the convergence with them and the United States generally accepted accounting principles, a well-established culture has been made and is followed. As far as non-financial reporting is concerned, situation is not so good. So there are several voluntary standards that are followed generally, but they are competing with each other, and they are followed more or less in the jurisdictions. Some jurisdictions are more and appear to be more advanced than others in environmental and sustainability accounting. There are very, very promising examples from South Africa, mentioned already, also Norway, Denmark, Spain, Germany, among several other jurisdictions. They are good examples, but what is the problem? They are not a unified, neither European nor global view of common standards as far as reporting and assurance of those reports is concerned. Good job is done. The OECD guidelines, one example, and major example, and others also, but but not a unified understanding. Another side also, Beate mentioned about the problems of reporting. There must be also, let's say, negative sides in reporting. So whilst recognition of the potential relevance of accounting to improve of environmental performance might indicate that accounting and reporting could improve sustainable corporate behavior, these mechanisms may also hinder such improvements. So there are several general problems now. And these problems, we have discussed these in detail, and these are also discussed, I believe, today. So the major problems we find are, firstly, the lack of clear definitions of core concepts in reporting. On what concepts, on what conventions reporting is based. Reporting is always based on conventions, but here, what conventions we are basing the non-financial information. So that is one of the first problem. So, and based on this, and based on this variety, variety of several standards, so there's lack of comparability and consistency between them. There are vagueness of key non-financial performance indicators, so it is one example of these problems. And accounting, what is most important, accounting techniques for non-financial issues are still very early and rather primitive developmental stage based on, compared to conventional financial reporting. So, what are our tentative suggestions to solve these problems? Firstly, we emphasize the role of accountants and auditors and their professional bodies who have developed financial accounting to develop also non-financial accounting, both on national and international stage. Best practices from various jurisdictions mentioned should be scrutinized and used. It is essential that corporate decision-making is based on verifiable reporting, and so to achieve sustainable companies, it is essential to emphasize the role of reporting. That is basis for corporate governance. And one example of this development and ideas for the way forward is integrated reporting, and Charlotte will present that after me. Thank you.